Welcome back to our weekly market wrap-up. Indian equity markets ended the truncated week with solid gains, snapping a six-session losing streak. Sentiment turned after the Reserve Bank of India's Monetary Policy Committee kept the repo rate steady at 5.5 while lowering its FY26 inflation forecast and raising its GDP growth projection. The move revived risk appetite with broader markets outperforming frontline indices. So stay tuned, and by the end of this video, we will unpack the key drivers behind these movements and what lies ahead. This week, the Sensex advanced 780.7 points, or 0.9%, to 81,207.1, while the Nifty 50 gained 239.5 points, or 0.9%, to 24,894.25. The BSE Midcap Index jumped 2% to 45,678.1, and the Small Cap Index rose 2% to 53,374.9. Markets began the week with modest declines on Monday and Tuesday, extending the losing streak to 8 sessions. A sharp rebound came midweek after the RBI policy outcome, driving benchmarks higher on Wednesday. Thursday was a market holiday on account of Gandhi Jayanti and Dussehra. On Friday, indices extended gains for a second straight session, closing the week on a firm note. So, stay tuned as we break down the key factors behind this turnaround and explore what could drive the markets in the coming week. Let's take a look at this week's key economic updates. India's manufacturing momentum cooled slightly, with the HSBC manufacturing PMI easing to 57.7 in September from 59.3 in August, though still comfortably in expansion. Industrial output grew 4% year-on-year in August, supported by a 6% rise in mining and 4.1% growth in electricity, offset by slower manufacturing at 3.8%. The RBI, while holding rates, struck a cautious tone but raised its FY26 GDP growth forecast to 6.8% from 6.5% and cut its CPI inflation projection to 2.6% from 3.1%, signaling a supportive policy backdrop. Globally, China's official manufacturing PMI edged up to 49.8, its best reading since March, though still in contraction. In the US, core PCE inflation stayed steady at 2.9% year-on-year, while a government shutdown, the first since 2019, triggered furloughs of 7.5 lakh workers and heightened policy uncertainty. Among this week's top gainers, Sammaan Capital gained 20.9%, after Abu Dhabi's IHC struck a deal to acquire around 43.5% stake via preferential allotment, boosting confidence in its turnaround. Tata Investment jumped 19.4% on optimism around the upcoming Tata Capital IPO value unlocking and a stock split expected to enhance liquidity. NetWeb Technologies rose 19.3%, continuing its strong run, backed by robust AI-led order wins and hyperscaler demand sustaining momentum. On the downside, the top losers, FirstSource Solutions, slipped 9.4%, as outsourcing sector peers faced margin pressure and weak near-term guidance spooked investors. Century Textiles fell 9.1% amid broader weakness in the textile sector, rising input costs and concerns about export demand. Dixon Technologies declined 8.8% on profit-taking and concerns over reduced promoter confidence following recent stake reductions. In the unlisted space this week, momentum in the unlisted market stayed strong this week, with marquee names stepping up their IPO and expansion plans. NCDEX shareholders gave the green light to a 770 crore rupee preferential issue, paving the way for a stronger equity and derivatives launch. Apollo Green Energy, despite short-term rating concerns, remains firmly on track with IPO preparations. Sterlite Electric added to the pipeline by filing its DRHP with SEBI, while Physicswallah announced a 460.55 crore rupee investment to scale offline and hybrid centers ahead of its much-awaited listing. Unlisted companies where interest levels remain elevated include NSE NCDX, Tata Capital Grove, Oyo Rooms, and PharmEasy. Get in touch for more. That wraps up this week's market highlights. Here's what to watch in the week ahead. Indian equities enter the next trading week on a cautiously optimistic note, supported by the finance minister's reaffirmation of resilient growth and elevated capital spending to offset external headwinds. Meanwhile, the ongoing US government shutdown is delaying key macro data, creating a data vacuum that could influence rate expectations ahead of the Fed's October meeting. Volatility may remain elevated amid domestic and global uncertainties. On the domestic front, the HSBC India Services PMI final for September 2025 will be released on Monday, 6th of October. Preliminary estimates showed a slight decline to 61.6 from 62.9 in August, though the reading remained close to August's peak, the strongest expansion in services since June 2010. The HSBC Composite PMI final for September will also be published on the same day. Bank loan growth data for the week ended 26 September 2025 will be unveiled on Friday, 10th October, showing a 10.3% year-on-year increase in loans. On the same day, India's foreign exchange reserves for the week ended 3rd October 2025 will be released after declining slightly to $702.57 billion, from $702.97 billion the previous week. Globally, China will announce its foreign exchange reserves for September 2025 on Thursday, 9th October, following a $29.9 billion or 0.91% increase in August to $3.322 trillion, the highest level since December 2015. In the US, balance of trade data for August 2025 will be released on Tuesday, 7th October, after the trade gap widened to $78.3 billion in July, from $59.1 billion in June. FOMC minutes will be made public on Thursday, 9th October, after the Federal Reserve cut the federal funds rate by 25 basis points in September to 4.00 to 4.25%. That's all for today. Stay connected with Tikona Capital for more insights and wealth-building opportunities from the themes of the decade. Explore more on tikonacapital.smallcase.com to know more. Don't forget to like, comment and share. See you next week.